BHEL is next up on our radar. Vamakshi is here with that one. Vamakshi.
Well, absolutely, Prashant. You know, the company reported its Q3 numbers. When you look at the revenue, that saw an uptick of almost 32% on a year-on-year basis. This is 4% higher than what the street was penciling in. And this revenue growth was supported by better than expected execution in both of their segments, power as well as industry. Now, the gross margin rose by 1,021 basis points to 37%, but the EBITDA margin saw an improvement of only 25 basis points. EBITDA saw an uptick of 41% on a year-on-year basis, but both the EBITDA margin as well as EBITDA came in below the street's expectations, and that is because the other expenses were much higher. They saw a very substantial jump. Net profit has nearly tripled, but again, out here, net profit has come in much below the street's expectations. When we look at the ordering activity, on the other hand, order inflow stood at 6,860 crores. This is an uptick of almost 167% on a year-on-year basis. Even when you look at the order book, it stands at 1.6 lakh odd crores. This is an uptick of 47%. So that part looks very robust. When you look at the segment-wise performance as well, for the power, the revenue grew by almost 32%. EBIT margin as well saw an uptick of 178 basis points to 11.18%. When you look at industry, the revenue saw an uptick of 33% and the margin too improved substantially by 465 basis points. So overall, when we look at the numbers, the revenue has come in higher than estimated, but the EBITDA margin as well as net profit are below estimates, and the ordering activity looks quite robust.
Thank you. CLSA today has lowered the target price to 166 versus 205. They say the stock is expensive at 34 times forward multiple.